Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to the sectoral action and all the stocks that are buzzing the most in trade. We'll help you understand the expert view as to how should you be approaching the markets. Where are the opportunities to buy, invest and get stocks for your portfolio? All of those things will be coming up right up next. But first up, a quick check on how the markets are doing at this point in time. Remember, 2 days of a lull on the D Street, but today they have bounced back quite smartly. 18,428 currently for the Nifty, 106 point uptick can be seen for that one. The Sensex is also higher by 370 odd points at 62,240. Both the major indices up by 0.6% odd. What are the broader markets doing at this point in time? Definitely inching higher, supporting the benchmark indices, both the mid-cap and the small-cap 100 indices up by 0.4% odd as well. Now, when we talk about the sectoral indices, we'll talk about the Nifty Bank, for example. That's up by 0.3% odd. We're also seeing, barring the realty pack, rest of the sectors are all up in the green today, led by sharp moves coming in from the IT pack today. That's up by over 1%. PSU banks have come back quite smartly, 0.9% of an uptick for that one. Apart from this, you're also seeing some moves coming in on the FMCG pack. That's also nearly up by 1% in today's trade. Half odd percent gains coming in on the auto pack as well. Pharma's inching up higher by about 0.2% higher. Private banks similar move as well. Financial services also up by quarter odd percent. Largely the sentiment is upbeat as far as the markets are concerned today. Which are the top gainers as far as the Nifty is concerned? The stocks that are supporting the move: Reliance Industries, 2% up in trade, 2487. That's the top gainer today. Divis Laboratories continues with its up move, 2% higher on the index today, 3502, the current level. Hindalco moves higher finally. HCL Technologies, Tech Mahindra also up by nearly 2% odd. On the downside, you do see some of the oil and gas majors like ONGC down by 1.3%. You're seeing power majors like Power Grid dragging, Bharti Airtel, HDFC, Grasim, some of the other movers on the downside right now. But time to welcome our guest on the show. Mr. Kranti Batini joins in from Wealth Mill Securities, the Director of Equity Research. Welcome, Mr. Batini, and thank you so much for taking the time out for this discussion. Well, smart move on the markets in today's trading session. What's really aiding the sentiments, and can it be sustained through the next week as well? Today is definitely, what we are seeing, a thank God it's Friday kind of a day.
Definitely, Sakshi. Today the mood is completely different in the markets. What we can see is Nifty trending high, and the crucial resistance zone of 300 levels. Nifty could able to sustain that level, and currently Nifty is trending around 18,425 levels. What we can see in the market right now is the change in the leadership. What we are witnessing is on the higher range of the market, stocks like Reliance Industries and uh, Infosys. These are the frontliners taking the leadership to take the market further. Uh, I can see some kind of the domestic buying that has been helping the market in past few weeks, and also FPIs have been selectively buying in Indian markets. That led the May series in a positive zone. Uh, what we can see in the coming days, Sakshi, we need to wait for the US debt ceiling news, how the last minute changes they could able to do, and also the monsoon. As we are in the last week of May, monsoon is extremely important for Indian markets. How the monsoon is going to progress, because still the majority of the population in India is depends upon the agriculture, and rural demand also comes from the agriculture. So the monsoon is one of the thing one need to be watchful carefully. We had a decent earning season, and the companies, mid and small cap companies, which have been declaring the results in past couple of days also, the results have been upbeat, and decent earning season is going on right now. So the level what we can see next is 18,520. If this level uh, Nifty could able to sustain, we can see some kind of further up move in the market. But definitely, every dip on Indian market, it's a very good buying opportunities for even to the traders and even to the investors.
That's right. Mr. Badini, definitely we are seeing 62,000 kind of levels. The markets are inching closer to their all-time high levels, just a few percent away from those levels as well. But the big picture is what we would want to understand today from you. As far as new investors are concerned, those who may want to be entering the markets from a long-term perspective, what is it that they can really expect? On the one hand, you do have consistent uncertainties that we are grappling with as far as the macro economies of the global economies are concerned. They may continue one after the other. We've been seeing last one and a half years, we've been seeing different kind of uncertainties really emerging and setting back the investor sentiment for some or the other reason. But for those investors who may want to create a portfolio of equities in today's day and age, what do you really expect from the markets, the equities over the next few years point in time as well? We're sitting at 62,000. By when do you really believe Sensex will be able to give investors 1 lakh kind of a level?
Yes, Sakshi. Sakshi, one thing the new investors and the existing investors in the market, they should know one thing certain in the market is that is uncertain nature of the market. That's what one need to understand from the market. So despite of this uncertainty and also the complex events that takes place in this across the globe, geopolitical and macroeconomic events that takes place in the world, one need to be optimistic and one need to see the greater picture how India is evolving and how world is evolving and how India is evolving and participating and uh, the bigger picture of India, how our GDP has been multiplied over last 10 years. From 1 trillion, we are at 3 trillion. And when 10 years back, when we are thinking about doubling our GDP, people used to raise their eyebrows, but we tripled our GDP. In next few years, the growth is going to double more further. So one need to see the greater picture and the macro fundamentals of Indian economy is extremely crucial. And we have been doing extremely good uh, and taking the advantage of the growth prospects that is evolving across the globe. So India is on a very good note right now. And if we could able to sustain this growth momentum over a period of time, of course, there will be short-term blips in this journey. But one need to think about the greater picture of India's growth story and they need to believe the certainty of India's growth story, even though there are uncertain events that takes place in the medium term. So believe in the greater story of India, invest in the companies where the earnings have been growing in a consistent manner and stay in those companies so the capital can be protected and they can participate in the India's growth story going ahead.
Correct. Let's actually look at the past performance of the Sensex and then thereby try and decipher what could be the potential kind of returns that you can expect over a period of time on the Sensex going forward from here. If we look at just a very short term perspective, over the last 3 months odd, we've seen the markets giving you almost a 5% kind of a move. Last 6 months have been volatile and therefore the markets have been kind of muted with slight bias on the negative side with 0.05% kind of a negative return. On a 1 year perspective, again, we've seen the markets really giving us a return of almost 14 odd percent in the last 1 year. We've also seen the last 2 year returns coming in at 22%. Last 3 years, it's been sharper, 100% kind of a move on the upside. Last 4 years, again, it's reduced about 50 odd percent. Last 5 years have been about 80 odd percent kind of returns. But the last 10 years, now that's when the picture gets better, because if you stay on in the markets for a long-term perspective, that's where you will actually see the change. In the last 10 years, the Sensex has given investors over 200% kind of a return as well. So if the investors had only invested in a Sensex index fund, you could have been sitting today on a 200% plus interest rate. Now, the average return of the last 10 years has come in about 62%. And even that average is far better than most of the other investment options that are there for the investors to consider outside. Now, going forward from here, next 1 year, next 5 years and next 10 years, how would you really see? Of course, it's a long time. We do not know what the world will look like next 5 years from now, next 10 years from now. But looking at the historical data, what would be an average expectation that a new investor can have from the equities, especially Sensex, if they invest in an index fund today, on the kind of returns that one can expect, sir?
Sakshi, one thing investors need to keep in mind. Thanks for presenting very interesting data. Uh, as the data is quite evident, if the investors have a greater picture, longer story, the returns are sustainable, and also they can create wealth in equity markets in the over a period of time. Coming to one thing, investors need to take into cognizance, Sakshi, that equity returns are not perpetual. They cannot come on a regular basis, just like a fixed deposit kind of returns every year or every month kind of thing. Equity returns can be given, the best returns can be made over a period of 3, 5, and 10 years basis. So if the investors have a longer term horizon, definitely they could able to make a CAGR of 15 to 16%. That is the returns they can make in the indices. If they identify with the experience they gain in the market, if they further uh, drill down and invest in quality mid and small quality companies, with the gainful experience they have, they could be able to upbeat their returns for a period of time. So one thing investors need to, the new investors, those are coming in the market at this point of time, they need to recognize the fact that in equity returns are not perpetual, they are gradual, and the CAGR returns will come over a period of time with a span of 3 to 5 years.
Okay, which are the key themes that you believe one should track in the journey of Sensex to 1 lakh now? Which themes do you believe will actually take the markets to those levels?
For India's story is concerned, Sakshi, we have a greater theme of banking and financial services, and this is the greater theme for India. And the Sensex have highest weightage of banking and financial services have a highest weightage in the indices. And IT also plays. If you see, there are always some kind of short-term blips with respect to IT, but if you see the greater picture of IT with a past 10, 15 years perspective, IT remains one of the favorable areas for the investors, and also the domestic consumption. As we are going to increase our growth prospects, as we are going to multiply the GDP of India over a period of time, there will be the consumption, India's consumption, going to play a vital role in the coming quarters and coming years. So one need to think about the companies in consumer spending, and also as the disposable incomes goes up, there can be emergence of some kind of thematic funds, thematic areas like the tourism, and one of the important immediate thing the government has to act with respect to India's growth story is infrastructure. So these are the themes one need to be investing and choosing the themes and selecting the companies in these themes over a period of time, Sakshi.
Okay, and when we talk about the key triggers for the markets, what is it that the markets will be betting big on to ride on those to really reach that mark, and what could be the potential risks in this journey of towards 1 lakh?
Sakshi, one thing is always that always investors need to take into their consideration the actions of Federal Reserve, uh, because the Federal Reserve has been keep on increasing the interest rates. How the trend of these interest rates is going to play a vital role in the coming days. The Fed action is extremely important for equity markets. So one need to take into cognizance the Federal Reserve actions, and also the geopolitical issues. These are the issues that keep on happening over a period of time. So the Federal Reserve action is extremely important for the investors. Even at some point of time, if the Fed is acting on its own, uh, the central banks across the globe has to follow the suit of the actions of Federal Reserve. So one need to take into consideration the actions of Federal Reserve is extremely crucial going ahead.
All right. And in case I have to ask you, what is the best way that investors should create a portfolio today to be reaping the benefits of market's journey to 1 lakh? What is the best way of creating that portfolio? What kind of stocks should one bet on? Should one bet on the traditionals like the HDFCs of the world, Reliance Industries of the world, ITC, SBI, those kind of stocks? Should one actually be experimental, get some more new age tech stocks also added into the portfolios as well? What should be the ideal mix and what kind of stocks should one bet on?
Sakshi, it is a very crucial question and a very difficult question, but I try to answer on my best. Uh, as you mentioned, always traditional things uh, reward the investors on a longer term basis. So one need to stick to the growth stories, the banking and financial story. One can stick to companies like HDFC, Reliance Industries, but in the traditional setup also they have been evolving the technology they are using. Reliance Industries have Geo, one of the technology platform they have, and they have been evolving over a period of time. So one can stick the greater proxies of India's growth story, and the new age technology companies, one need to think about the sustainability, and also the greater disruption is happening in these companies, and the valuations also extremely crucial. At what valuation level the investors are entering in these stocks. There should be a blend. Uh, Adding new age companies also extremely important, but what price investors are adding those stocks in their portfolio, and when the break even is coming for these companies is extremely crucial over a period of time. But at the current point of time, investor can stick to uh, the larger players in India right now, and they can stay invested in these companies. And one thing investors need to keep in mind is every dip is a greater opportunity for them. So one need to participate when there is a dip in these stocks prices also.
Right. Mr. Patini, in the end, if you could point out some of your stocks that you are keeping on your radar over the next few years, which you believe can actually turn multi-baggers, give huge opportunities for investors to make great wealth, what could those stocks be?
Sakshi, uh, I'm not going to talk here a multi-bagger kind of thing. One thing is capital protection is extremely crucial for the
Sure.
investors before making any kind of multi-bagger kind of returns. So while coming to the capital protection is concerned, one need to stick to the large cap stocks in banking and financial services, HDFC, Reliance Industries, the conglomerate. One need to think about the consumption story. One can add the consumption stories in India. uh, the engineering stocks one can add, and infrastructure stocks they can add, like the L&Ts of the world, and and in the engineering space, Cummins India, we discussed a couple of times on your show. The
Yeah.
stock silently given 100% return to the investors. We have been discussing this stock on your show at 800 and 1000 levels, and the stock currently at 1700 to 1800 range. So one need to cognizant about their portfolios, and also keep on adding these themes, changing the themes in the market.
All right, understood that. Well, thank you so much, Mr. Batini, for being with us on the show and discussing all these very interesting insights about what to really expect over the long term when we talk about the Sensex reaching 1 lakh target and how should investors be really looking at tapping this opportunity at large as well. Always a pleasure having you with us on BTTV. Thank you so much for taking the time out for us. Well, looks like the
Thank
markets
you.
are inching
Yeah,
higher
always a
now.
pleasure.
Thank you. And when we look at the Sensex right now, 422 points of an uptick is what we can spot. 62,294, the current levels. 18,441, the current levels for the Nifty as well. 120 points of an upside. Definitely turning out to be a good Friday so far as we speak. We'll keep an eye on how the markets really trade in the second half of trading action. Are there any leading indicators of any themes, stocks, sectors that you should be watching out for? We'll keep you posted with everything, but you should stay with us on Business Today TV for that. So don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms. That's Twitter, LinkedIn, Facebook, and Instagram. Until then, many thanks for tuning in.